If you're looking for an awesome product at a great price, be sure to check out the link in the description. The Bank of England is poised to make a significant move this week, with widespread expectations of an interest rate cut. This anticipated decision comes amidst a backdrop of rising unemployment and the economic fallout from Donald Trump's latest round of import tariffs, casting a shadow over global trade. City traders are already placing bets, predicting a 0.25 percentage point reduction, bringing the headline rate down to 4%. This would mark the fifth rate cut since last August, effectively reversing the rate to its March 2023 level. Market confidence in this reduction is high, exceeding 80%, with further cuts anticipated before the year's end. The potential for a ripple effect on UK house prices, following a recent recovery from a June dip, remains a key factor in the equation. Chancellor Rachel Reeves is expected to welcome the move, a decision that will offer relief to mortgage holders and struggling businesses by reducing borrowing costs. However, this seemingly positive step reveals the complex economic challenges facing the UK government. The delicate balancing act of stimulating growth while simultaneously controlling Whitehall spending ahead of the autumn budget presents a considerable hurdle. Recent economic data paints a concerning picture. The economy contracted by 0.1% in May and 0.3% in April, a downturn largely attributed to the uncertainty surrounding Trump's tariffs and the impact of increased business taxes introduced last October. Further highlighting the slowdown, the number of job vacancies has fallen below pre-pandemic levels, and the unemployment rate has climbed to 4.7% in the 3 months to May, its highest point since June 2021. While a trade deal between Trump and the UK has capped tariffs on most goods at 10%, the US president's recent announcement of additional import tariffs on various trading partners, reaching as high as 50%, threatens to further destabilize global growth. The International Monetary Fund's (IMF) forecast offers little solace, predicting minimal economic expansion for the UK in the third and fourth quarters, projecting a meager 0.1% growth before a slight uptick to 0.3% next year. The Bank of England's Monetary Policy Committee, MPC, is set to release fresh forecasts on Thursday, forecasts that may paint an even bleaker picture, hinting at the looming threat of stagflation. This scenario involves a simultaneous slowdown in growth and persistent high inflation. Adding fuel to this fire, the Consumer Prices Index, CPI, surged by 3.6% in the year to June, significantly exceeding the MPC's 2% target. Experts, such as Matt Swanell, chief economic advisor to the EY Item Club, offer insights into the complexities of the situation. He points to the weakening labor market, evidenced by the rise in unemployment and a cooling in pay growth that outpaces the Bank of England's May projections. Swanell anticipates a divided vote within the MPC, highlighting the tension between the need for economic stimulus and concerns about persistent inflationary pressures. The recent jump in food inflation, particularly impacting the cost of essential items like meat and butter, adds another layer of complexity. This increase in food prices carries significant weight for the MPC, as it directly influences household inflation expectations, a key factor in assessing the risk of prolonged inflation. The impending decision by the Bank of England holds immense significance, not just for the UK, but for global markets keenly watching the unfolding economic drama. The coming days will reveal whether the rate cut will be sufficient to navigate the stormy economic waters ahead or if further measures will be necessary to avert a deeper downturn. The weight of this decision, and its potential implications, hangs heavy in the air as we await Thursday's announcement. The consequences of this decision will undoubtedly reverberate across the UK economy and beyond, impacting businesses, households, and the global financial landscape. The eyes of the world are on the Bank of England, and the coming days will be crucial in determining the path the UK economy will take in the months ahead. The uncertainty surrounding the economic outlook